I wouldn't be surprised at all if the all-time high, the peak would be 3,000, so 3x the 100,000 number, $300,000. And the same with stock to flow X, so the 288 is an average. It wouldn't be strange at all to have a $500 peak in the stock to flow X model. So I would not be surprised if we see a sequel of 2013 and a 10x from here. I think that would be totally consistent with having a normally distributed price pattern, a price returns pattern of Bitcoin. The big similarity in this chart shows is that in the long run, if you're a hodler, it doesn't really matter because both models expect higher prices and a lot higher prices and returns that cannot be made with other assets. So it doesn't matter which model you take. If you're a hodler, you can follow both models. The stock to flow model, stock to flow X model, is that the stock to flow X model is not at all interested or focused on peaks and bottoms. So it's a statistical view, and it's looking at averages. It's looking at phases, is what I called them in the stock to flow X article. So it's average levels, and you see those levels here in the white, the thick white line. Those are approximately 4 year averages that I'm trying to predict. And the reason that I don't, the all-time highs are interesting, of course, but I don't care at all how high the all-time high will be, where it will be, and that's, I guess, and same for the bottom of the next bear market, if there is a bear market. But and I guess the context of that is that there's a big difference between technical analysis and quant investors in institutional investment companies like me. So, for example, now look at the top of 2017. That was a maybe 1 day event, and 1 day is not enough for a big investor to offload, to sell all his stuff. I think even a week would not be enough to sell your stuff without moving prices in stealth mode. And that's more true for the bottoms. The bottoms are most of them are liquidation events. Those are maybe 1 minute events where all the long the leverage longs the leverage shorts in this case are killed, and I'm sorry, the leverage longs are killed, of course, so they're all liquidated. That's a spike, maybe 1 minute, maybe an hour, but then it shoots up. But that will define the bottom. So for me, it doesn't make that much sense to use all the tops or all the bottoms as the inputs for a model, and I see that a lot on Twitter there. So you draw a straight line, for example, between the top of 2013 and 2017, and then you expect the next top to be on that same line. And that's not my view of the world. I'm much more interested in what that average price level will be after, in this case, the halving, and that's what I predict with the stock to flow model, which predicts an average of $100,000, and the stock to flow X model, which predicts an average of $288,000. People in the discussion, they always want to know where's the top, where's the bottom, etc. And I don't know. I don't know. But there's some I want to know. So the question that Dave asked me is, well, when is the model invalidated, and when is my model invalidated? The lengthening cycle theory, and so I said, well, yeah, I'm talking levels, $100,000 level, but that means that the peak will be higher than that, right? It will be to be on average 100,000. The peak can be, if we look at 2017 or 13, it can be, and the errors, that's the white dots below, it can be 3x or even 10x above that level. So I wouldn't be surprised at all if the all-time high, the peak would be 3,000. So 3x the 100,000 number, $300,000. And yeah, so and the same with stock to flow X. So the 288 is an average. So yeah, it wouldn't be strange at all to have a $500 peak in the stock to flow X model. But to get at an average of 100,000 in this cycle, so in the 4 years after the halving, it should cross the 100,000 level somewhere. One more point, I wouldn't be surprised to see 100,000 before Christmas this year, and then a extension of that bull market towards 288 and maybe 500,000 in 2022. So to answer your question specifically, so the peak could be well after December 2021.